What's going on, guys? Hope you all well. Welcome to the MFX Gold version 2 indicator tutorial. So let's take a look and dive a bit deeper into the indicator so that everyone has a deeper understanding on how to use it and what to do with the indicator. So basically, as soon as you guys jump into the indicator, you will see that we have quite a bit of zones. You may be overwhelmed at this point by so many zones. Guys, don't stress at all. The indicator is completely simple, nothing complicated about it. If you guys look at the indicator, we have our normal buy zones, we have our normal sell zones, we have our power buy zones, power sell zones, MFX buy zones, and MFX sell zones. Now, first things first, next to each zone, the zone is labeled with a star rating dependent on the risk of the setup. For example, on a low risk setup, we'll have 3 stars. On a medium risk setup, we'll have 2 stars. And on a high risk setup, we'll have 1 star. So you guys can manage your risk accordingly to the star rating next to it. Also within these zones, you guys have something called touches, meaning that if a zone has been touched multiple times, it becomes weak. However, if the zone is not touched, the label will display as fresh. So as you can see, the zone is not touched. It's labeled fresh. The zone says 1 touch. So obviously, guys, the more touches the zone has, the weaker the zone will be. So personally, from my own trading experience, guys, try and trade only off of fresh zones unless your strategy tells you otherwise. Maybe you guys are adding a strategy to this. You're using the indicator as a confluence in some way or the other. Otherwise, guys, I mean, those are your normal buy zone, sell zones. You have normal buys, normal sells. Your normal buy zone, 1 star will be green. Your normal sell zone, 1 star will be red. Your power buy, 2 star will be purple. Your power sell, 2 star will be purple. There's something called a MFX golden zone, which is a 3-star zone. Let me drop down a time frame. I probably can show you guys on the lower time frame. There we go. Perfect. Okay, guys. So on the 5-minute time frame, this golden zone is called a MFX buy zone. This is a 3-star zone with 3 confluences together. So when you guys see a 3-star zone, the zone is low risk and you guys can risk a bit more of your capital on these zones. So try and prioritize these zones, guys. Golden zones is obviously the best zones you're going to get. And likewise, how you get the MFX buy zone, you're going to get an MFX sell zone just the same way. Those are your normal buy zone, sell zones. The indicator also marks out your fair value gaps. So I know a lot of you guys love to trade fair value gaps. You guys wait for something specific to happen in the market and you look for that fair value gap. However, the indicator is designed to mark out your fair value gap so that your eye doesn't have to strain to look at it. You'll see a percentage basis next to the FEG zone, meaning the higher the percentage, the more the zone has been filled. For example, the zone is 81%, meaning that price came in and filled 81% of this fair value gap. So pretty much simple, nothing too complicated about fair value gaps. Then you have this line in the center of the chart called your POC. POC meaning point of control. Now, what is a point of control? So your point of control is where the most volume took place in the market on the previous day. For example, the current day, well, it's weekend, so the last trading day was Friday. Your point of control will mark out Thursday's volume. So for example, on Thursday, this is where the most volume was traded in the market. So automatically we know when price comes to this level, it's going to start bouncing. So it's a nice key area, guys, to show you in your previous day where the utmost volume was traded. So POC is pretty much simple. If you guys get a POC line in confluence with any of your buy or sell zones, that is a high probability setup and you guys are more than welcome to take it because POC in confluence with a sell zone or a buy zone, guys, go for it. And that's personally what I wait for during the day, because that's, one of the biggest key levels any trader should know about. Second of all, you guys have support and resistance. I know a lot of you look for these support zones, resistance zones. They're fairly simple. They work on volumized touches as well. So, simple case, guys, support zone, multiple touches in the market. If you guys get the sell zone or buy zone in confluence with a support or a resistance zone, you guys can use that as well. And remember, guys, with this indicator, how I design this indicator is the more confluences we have in a zone, the higher the probability is set up for us to actually take the trade. Remember, we don't want to know, for example, we understand the market is bullish. Where do we buy? There's multiple buy zones, but obviously, the zone that is most likely to work is the zone with the most confluences in the market. So pretty much simple, guys. Not too much. Yeah, and then we have something called a breaker zone. So what's a breaker? A breaker is basically a failed buy or sell zone that turns into a breaker block. I'm sure a lot of you guys know what's breaker blocks. However, we use a breaker block in a sense of, and let me go to another time frame, so that's something that's a bit easier for everyone to see and actually understand when it comes to the breaker blocks. Okay, this is actually nice and big. Waiting for your chart to load that out. Okay, perfect. Here's actually a good example. All right, guys. So basically, this is where the zone was created. This initially was a buy zone, right? Price bounced through the zone. It tapped the zone. It bounced up, tapped it again. And we had multiple touches. You guys probably made money in this area. And all of a sudden, we broke through the zone with strong selling pressure. So because we broke through the zone with strong selling pressure, if you guys were in buys, you would have gotten stopped out. Now, what we do is the minute you guys get stopped out, if the opposing pressure is enough, the indicator will turn that zone into a breaker zone or into a retest zone, and you guys can go in the opposing direction and recover your funds instantly. For example, we were in a buy area right about here. The market stopped us out and we took a L. That's cool. All we do is then we now see the indicator created a breaker zone. We wait for a retest of the breaker zone and we enter sells and the market recovers us instantly. So guys, that is what a breaker zone is. For example, another area right about here. This was a buy zone initially. The market created a zone. It pushed up. Some of us probably didn't close in time thinking that the market would push higher. Price broke all the way through it. We got probably a small retest of the zone, not entirely a good retest. But if you guys seen that and entered off of it, you would have recovered your funds. So guys, retest zones or breaker blocks is practically for immediate recovery of funds. It just helps us trade the right way. And like I know a lot of you guys have the habit of revenge trading, and this is the only way to cure that habit, because if we buy and the market is selling, it's going to stop us out. And so instead of us depositing more funds and trying to catch this falling knife, we now have a recovery zone. So guys, that's the simple part of breaker blocks, not too complicated. And then we have our info box in the top right corner. So our info box is basically giving us information of the trading day. So at the bottom, we have a prediction basis called bullish date close. So what this does is it takes certain time locks and it predicts whether the day will close bullish or bearish. On top of that, we have something called gap. Our gap predicts when the market closes in the evening. Are we going to gap up or are we going to gap down after that 1 hour of the session closing? So that predicts a gap up or a gap down. I know a lot of my traders love to trade gaps. They open the trades when the market closes and the market gaps and they make quick money. Also, guys, on top of this, you guys will see DXY and VIX volatility index, your dollar index and your volatility index. Now, as a gold trader, it's not just about looking at gold. We need to look at all aspects that control gold, our volatility index, our DXY, meaning our dollar index. So, guys, I've coded this indicator to give us a bias based on those background charts so that we don't need to go back and forth looking at multiple charts and um, by the time we look at DXY and then look at volatility index and come back to gold, we already missed the entry. So that's what this box is here for, to give you your core bias to tell you whether the market will buy or sell. So you guys can just keep an eye on that box. It's pretty much simple, fairly simple. Um, Also, guys, coming down to the main question, right, Memon, where do we understand that these are our buy zones, we understand that these are our sell zones, but bro, which zone do we take? Okay, guys, here's the cool part of the indicator, right? The zones highlight, the midpoints start highlighting for you guys. How cool is that? For example, if our core bias is telling us gold will buy, the midpoint of the zones will start highlighting. It will start glowing. The zone will highlight, guys. So, for example, you guys can see a neon blue dotted line. The indicator is trying to tell us buy in the zone. For example, we've got a green buy zone 1 star. The indicator is trying to tell us buy in the zone. Why? Because the zone is highlighted. These midpoints are glowing to try and keep us in the right direction of the market. You guys will notice our sell zones look so boring. I mean, we have this great dotted line in the center. We have, I mean, you can't even see the dotted line. So, guys, the indicator will force you to trade in the right direction by it glowing the center line, your 50%, so that you guys always know which direction to go into. Because it's fine that we have a buy zone and it's fine that we have a sell zone, but we need one way or the other for the market to actually go. I mean, now that we know the market gold bias is a gold buy, that's all cool. So we wait for the market to tap into our buy zone and we take the market up. Another question I always get is, bro, where do we place our stop loss? Guys, as soon as you enter a trade, we wait for the price to tap into our buy zone. We place our stop loss $1 or $2 under the zone and we target either the next zone or we target our structure points. So, guys, pretty much simple. Stop loss either goes above the zone or for a below the zone, or for a sell zone above the zone. Pretty much simple, guys, not too complicated. You're either targeting your next opposing zone or you're targeting structure points. Also, a lot of the guys for that love scalping. So in the indicator settings, you guys will see where's the setting? And just double. That's our time frame for that. Oh, here we go. HDF for nested zones. Default is the 4-hour. If you guys are scalping on the low time frames, turn this to the 1-hour time frame. The indicator will update and you will notice some few things change. Just waiting for the chart to update. Not too hard, guys. For example, I'm going to go down to the 5-minute time frame. Remember, guys, this is a high time frame lock, meaning that all low time frames will now follow the 1-hour. And basically, if a low time frame zone falls within a high time frame zone, the zone will highlight itself. It will create a golden border around it and label it HTF, meaning that on the 1-hour time frame, there is a sell zone in confluence with our 5-minute sell zone. So what that is, guys, we are merely simplifying the market in order to get a smaller stop loss instead of opening our stop loss up bigger and, risking a big amount. So at least if you guys know when you're scalping the low time frames, you know what zones to look for, what zones not to look for. So that makes it quite interesting. You guys know exactly what to prioritize and what not to prioritize. So Yeah, guys, fairly simple, nothing too complicated about the indicator. I know it looks very overwhelming, but it's completely simple. Your previous day highs and previous day lows has been marked out with the indicator. I mean, it's a nice way to, to simplify your trading as well as, I mean, people don't have a lot of time to do analysis during the day. By the time you do analysis, I mean, you're either missing the setup, you're not sure if you've done analysis the right way. So, guys, I've taken 6 years of my trading experience and I've coded it into this indicator. And you'll notice there's a lot of different things from a lot of different strategies. And I mean, this is what works for me. This is what works for my traders. And the most important part is that we are profitable. Now, a lot of you guys are going to ask of our indicator percentage win rate. Guys, we do not work off a percentage win rate. My success is based upon my traders, and my traders will actually tell you their success stories behind this indicator. So, I mean, yeah, guys, I really hope you guys make many millions with the indicator, and I really hope that you change your life for the better. And if you guys have any questions regarding the indicator, you are unfamiliar about something, you are more than welcome to private message me, send me an email, um, speak to one of our admins. And yeah, guys, take it easy. Let me know if you guys need anything. And then again, Mammon FX always wishes you nothing but blues.